All right, so I have to make a quick apology. We were going to have a second speaker, second panelist up here, Nguyen from OKCoin, but he is currently stuck in traffic on the bridge. He's been stuck there for a while. So this is Imran Khaliq, and I can introduce him, but I think he would do much better than I will. So,
sure. Yeah, I'm an attorney. I've recently worked as general counsel for DaVinci11. It's an AI ad tech company. And previous to that, I was a lawyer at several international law firms. My practice is in corporate, regulatory law, intellectual property. I'm a registered patent attorney. And most recently, I spent time helping a company go through an ICO. So we'll be talking a little bit about that.
Great. And I'm David Mata, as Meredith stated, and I am the co-founder of BlockBits Capital. We're a capital firm that's focused on investments in the crypto space, as well as venture capital investments and exploration in the blockchain space. So I get to see a lot of neat things, particularly ICOs, when they've gone and worked with people like Imran here. So we have a few questions. The original panel was going to be essentially Jim and Imran fielding questions from me. With Jim gone, I think we can make it more kind of a discussion between you and I.
Yeah, no problem.
I don't think that.
I don't think we have a choice.
Yes, there's that. Well, I can just dance with. So I don't think that really changes up much of our questions either. So let's just kind of jump in. What is the state of the market today from your perspective? And then I'll kind of finish.
Sure. I mean, so as somebody looking at the market, both as an investor but also as an attorney, I think we all know that the crypto market has tanked pretty big time. I think that has been largely due to just sort of the nascent aspect of the industry, still going through a development cycle, just cyclical. Maybe it also had to do with the general equity markets also having a downturn, so we saw some of that affecting the crypto markets as well. But there are also a lot of movement busts with a lot of companies that were engaged in, quote, pump and dump schemes and whatnot. So I think that has sort of brought the market down to a level that is more sane, I guess, so to speak.
I know when I spoke earlier this morning, one of the things I mentioned is that a lot of the companies that raised capital, 2016, 2017, first half of 2018, they're essentially no longer functioning concerns.
Right.
And I think what we're seeing here is, without using the term like, bubble bursting or such, is that we're finding the market starting to find its level. Right. These monies were raised in kind of this heady time where you bought Bitcoin for 10 cents a couple years later, where it would have cost you a couple thousand Bitcoin to buy a pizza. Now, a single one of the Bitcoin that you have is worth, a couple $1,000s or even more. All of a sudden, what do you do with this additional capital that you never accounted for? So you throw it into something else to gamble. And I think we just saw that over and over again.
Right.
People not really paying attention to the important factors of getting into and investing in the company. And then what we found with a lot of the ICOs is that they weren't investments.
Right. I mean, I would analogize a lot to the dot-com boom.
This is our third speaker.
Early to mid-90s, just about any company with a website was raising millions of dollars. The same thing could be said about
Sorry, it took me 3 hours.
any company that issued a coin was raising millions of dollars with less focus on the product and the technology and blockchain, but just more speculation more than anything.
I did work for one of that, so yeah, that's what I understand.
At.com.
Yeah, exactly. And it looks like Jim's here. That's fantastic. He's getting mic'd up, so he's going to be joining us up here in a moment. Yeah, is there anything you want to add so we can fill a little bit of time?
Here's the moderator. Discussion.
Well, here he is. Welcome. How you doing?
Sorry, real quick.
No worries. No worries. Yeah, it's happening to a lot of us right now. So where we've gotten so far is Imran's introduced himself. I've introduced myself. If you'd like to do so, that would be great.
Sure.
And then we kind of started with that first question, kind of where the state of the market right now. You want to just jump in?
My name is Nguyen. I head up product and marketing at OKCoin, and OKCoin is a regulated cryptocurrency exchange. We started in Beijing 2013. We now have offices in San Francisco, Hong Kong, Shanghai, Argentina, and Malta. And we're looking forward to 2019.
All right, so the question that we had started with is essentially, what is the state of the market today from your perspective? Since you have a considerably different perspective on both Imran and I.
Yeah. So as an exchange, we have the opportunity to get to know a lot of projects. They come to us to get listings. We have a broad view of different types of projects from Asia, Europe, and the United States. One of the things we're seeing now is the first inning of the game is done. 2017, 2018 is kind of curtailing right now. What we're seeing and what we're working the pipeline for are the next generation projects. What we learned in 2017-18 is that Ethereum gave birth to a way to a platform to develop your technology and also a way to fund. But those two categories, they have their challenges. One is on the product side, which is a scaling problem. On the other side, which is a security problem. So those issues are being addressed right now. One on the regular side. But on the product side, what we're seeing is folks who were back in the days who scaled from modem to DSL to gigabit Ethernet. Those are the folks who are coming out now from the large companies to attack the similar problems that we're seeing in the blockchain. So it's very exciting.
Oh, we jump to a question I have regarding regulation a bit, because you guys are a regulated exchange. Where we're sitting right now is the SEC and the CFTC haven't properly determined yet if cryptocurrencies are securities, commodities, currencies, or a mixture of all three. What kind of regulations should we worry about from a business sense? And then for you, are we seeing that there's a lot of differences between regulation in Asia versus North America versus the EU?
Okay. Yeah, go ahead. So when you say we, I'll take that from the perspective of a potential project looking to start a new company or a birth technology stack. So the first thing is whether you're starting a company in the blockchain ecosystem or in the traditional internet, you have to have a product, and the product has to work. So the first thing is make sure that your product has a utility, and set up the infrastructure so that when you raise funds, you shield yourself from all the various challenges that can come if you don't set it up that way. What we look for, on the other hand, is we look for a project that actually has true utility. Does the token actually go ahead and allow your network to do something that is not possible without utility? For example, today a lot of applications, whether you're on Dropbox and so on, you can just load using PayPal or Visa credit card and so on. But is there a token that you can load into this new decentralized technology stack that creates new applications, new services that's not available by paying fiat today? And that's the way we look at projects.
So yeah, I'm glad you mentioned that you're looking at companies where the tokens actually have some utility. I think that probably helped maybe distinguish your exchanges from a lot of exchanges out there, and there are a lot of exchanges out there. So I guess from a legal regulatory point of view, I guess looking at the companies themselves, what sort of issues are you going to face if you're going to do an ICO and try to raise money? Because that's really the whole point. The whole point of an ICO is to try to find some sort of crowdfunding alternative to securities, which are highly regulated. Exchanges have to be registered with the SEC, but if you're a mobile company, you're trying to raise funds, the SEC is currently looking at whether your token is an investment. Is there a common enterprise where participants are looking to make profit off the tokens as opposed to get some service or utility out of the company? So that requires some arrangements. Companies are using white papers to characterize their tokens as utility tokens versus investments, and that helps. But ultimately, the regulatory body will look at how the business is operating rather than what's being put in the statements and on the website.
And I can add to that, in terms of the second phase, we're talking about second inning. 2017, 18, you jumped up a token and you try to backfill with an application and you go do an ICO. We're actually seeing the reverse now. We're seeing entrepreneurs sitting down saying, what are the applications we do? And you know what? Let's not launch a token yet. Let's see if the application works, and then over time, see how token economics plays in if that's necessary. One of the things that I like to highlight when we look at projects is, and this is kind of the fundamental shift in looking at blockchain. A lot of projects so far that we've seen use blockchain as an internet infrastructure. And that may be the case, and there may be some applications that come out of it. But truly, to make an application work on the blockchain, you have to use the blockchain as a finance infrastructure. And that's a really key difference in the two ways that you look at the projects.
All right, let's jump on to the next question. We may come back to that. There's a couple things floating in my head.
Yeah.
So, if we were to develop essentially a perfect market today for usage of cryptos, do we have existing models? And what do they look like? If there was a place for an entrepreneur to say, this is how a cryptocurrency could be done right in order to avoid issues of security or to actually prove a utility value and utilization model that makes sense, what would we look to right now?
I'm an engineer by training, and I geek out all day, but when I get home from work, I try not to geek out as much as possible. I'm going to go ahead and use the Dropbox example again. I got a charge a few days ago for my next year's bill, and I continue to use Dropbox. So the idea here is, how do you hide all the complexities of the internet and all the stacks away from the consumer? Today, when you look at blockchain applications, you have to go buy the token, you have to go actually load it in, and sometimes you don't use all of it because it's stored somewhere. And all those various things, it's more of a hobby, in my opinion. Right? To get it to a level where you don't even have to think about it, it works, I think that's where we have to get to. Imagine if we had to deal with all the complexities of iOS or Android, we had to sort of boot up our phone just to answer a text. Right? So we have to hide all those complexities, and I think that's where we go.
Would you like to add in before I jump in?
No, go ahead.
All right, so I think what you brought up is that there's a lot of complexities right now to utilization of Bitcoin or Ethereum or NEM, what have you. As a model, though, don't you think what we already have with virtual currency in the mobile gaming space, and just in the gaming space in general, where it's a closed system and essentially treated as a pre-purchase of services via a token or a coupon, could that be essentially a good place to start for somebody to model a cryptocurrency and then work on abstraction layers that basically take all of that complication away from the user and make it as simple as, if you want this product, tap your finger, and the back end will interact with the wallet, interact with all the transactional layers and identification.
Exactly that. So that's basically what I mean by reduce. Let's take gaming, for example. You load in your fiat currency, you buy your token, whatever maybe it is, whether it's gold, silver, or bronze, and then you spend it as you go along. You don't have to worry about the storage and movement of those tokens, and you don't have to worry about there's one token. One of the things also is that there's a price fluctuation with cryptocurrency today. So 3 Bitcoin worth of services is different than 3 Bitcoin services of yesterday.
But a lot of that fluctuation is due to it being a deflationary currency, which you can avoid if you have a minted and stored currency instead, where it's minted essentially like a tether, where it's minted upon the point of purchase, and then a point of use, so you destroy.
That's correct.
Oh,
Absolutely.
so that way, developers or companies could actually set a pegged standard value, and then use that for company revenue projections.
Another way to think about it also is when you look at cryptocurrency or virtual currency, we can see, they say that like convertible virtual currency. We can see that as a financial application where it's more trader-centric, buy, sell, investment. And then you move that to more of a stable coin today, and that stable coin becomes your currency to use across the various blockchain enable applications.
Okay. Anything like that?
No, I was just gonna ask him if, how do you guarantee security for the people using the exchange? We had this Quadriga example in Canada where $190 million was lost because apparently the founder and CEO was the only person who had the keys and encryption credentials to monitor the storage of the tokens on that exchange. What can be done to mitigate something like that?
So OKCoin's been around for 2013 and not going to win, but we haven't been hacked so far. That's one of our pride and joy in the company. There are various mechanisms in place to put that together. I can't say anything here about that, but I think what's happened in the last couple of weeks about the unfortunate founder who passed away, I think is a one-off use case. But in technology, as you know, there's distributed keys and various books, hopefully various things.
I guess that's what I was having trouble understanding is if you have a decentralized network where tokens are on ledgers in a distributed network, how can $190 million worth of tokens be lost in a decentralized network? It's supposed to be decentralized.
The tokens aren't lost, it's access to them.
Okay.
The tokens are still up there on the blockchain. You just don't have the key to get in there.
I see.
Yeah.
Okay.
And, I'll go so far as to say, what happened there was a massive violation of fiduciary duty.
Right.
Not just by the CEO who may or may not be deceased,
Right.
but by every other officer of that company.
Right.
There's multiple tools right now, multi-sig wallets, ways to have duplication of security tokens, so that in the case of the CEO done, which may or may not happen here, the CLO has access,
Right.
the CTO has access, somebody has access to enable the company to continue beyond the death of one particular employee.
Right. I guess part of this was also wallets being stored at exchange versus offline, right? Was that?
Well, it's just cold wallets, it's cold storage wallets that were, I don't think that makes much of a difference. Would you think?
I'm just saying 5 minutes left.
Oh, all right, do you,
No, sorry.
oh, no worries. Do you think the difference between what the bulk of their currency being held in cold storage wallets had anything to do with whether or not they'd be accessible after the death of an officer?
It should be held in cold storage, and that's first and fundamental. It's just who has access to the keys. Being a regulated entity is not only having regulation or having the licenses for MTLs, but also best practices in place to ensure that your funds are not lost. When you go to Bank of America, it's like, hey, I lost my password. The CEO is no longer he left the company, so we can't access any of your funds.
Right.
So it's in its own nascent state phase. But going back to your first question, which is, what do you look for in exchange? This is where regulation is really important. Regulation is not only to hold your cash, but it's also everything else from the start of your deposit to the withdrawal of your funds, right? The whole test process.
That makes sense. Yeah. Totally agree.
I want to take a quick stop since we're coming close on time. Does anybody have any questions? Live and no. Okay. And I've got one more question here. Since the point of our talk was to discuss essentially what a decent alternative market would look like right now, what would you say, both of you, would be a safe architecture for a cryptocurrency platform in a business setting?
What is
Essentially a platform that would utilize a cryptocurrency as, be it a method of payment or a method of transacting, let's just leave it at that, in a business setting where I think we can look at it as a takeaway, like walking out that door, where could it go?
So, if I understand your question right, it's basically how can an enterprise look at a use case? Or let's start with very fundamental. Take one of the blockchains, EOS, Ethereum, XLM, Stellar. have that become one of your platforms, just like Red Hat Linux, OS in the marketplace, or Windows, and run your blockchain application based on that. And then, of course, there are fees associated with running these blockchains. And that's how we see it. It's running, just like in every organization, you have different operating systems, databases for certain applications. You just, just launch another stack for your blockchain-based application.
So essentially, find a network protocol that is live, active, and building.
I think, yeah, from just my perspective, I think what is needed is to renew faith in the industry as just best practices. Education, I think consumers need to understand whether the companies actually have products or not, or whether they're just purely speculating in some virtual coin. I mean, that's part of the burden lies on the consumer. The other part, as you said, the officers have fiduciary duties and fulfill those responsibilities, and then the exchanges themselves meet regulations so that passwords and keys just don't disappear if the founder goes to India and claims he died of Crohn's disease. There's all parts to this, I think, that need to come together in order to make this safe and secure place to invest.
I guess one last question. Sorry, Meredith.
No, you're good, you got 1 minute.
Do you think the crypto market's really open to this level of regulation that's going to be required for people to trust the technology? Or does it matter?
I mean, I'm all for less regulation. Funny for a lawyer to say that, but I actually believe in the free market. I don't think the legal system always catches up to technology. They're the last to catch up to technology. So I think the markets need to solve the problem and give faith to consumers and businesses who are in this space before the regulators actually step in.
Our company, we have two major teams. One is the product team. The other team is the compliance group. We work very closely together, and what we think of at Bitcoin is how can the surrounding groups help the product team come up with innovative products. It's not having legal compliance be the gatekeeper and just keep the door shut and say we don't get to go out the next year.
Right.
Basically, what can we do in a legal framework so we can get you out? If there are features and capabilities that are not defined by the regulator yet, let's speak with them and see, hey, is this possible? Is this out of bounds? And also, it comes back to use your judgment, right? If you think, if you put your name on this and it goes out to everywhere on the internet, would you be comfortable with it? I think that's where the litmus test is.
Right. I guess last point before we head off. I mean, a lot of founders companies say, okay, how can I structure this so I'm not a target of the SEC, get fined or go to jail, right? I mean, that's the main concern. But I would say, yeah, that's a concern. But your primary concern should actually be your investors and your consumers. If you can satisfy them, you won't have any of these other problems.
All right.
On that note, thank you all.
Thank you.